Hey everyone, now that we are in 2024, first of all, I wish you all a very happy new year. I wish 2024 brings a lot of good health, happiness, and prosperity in your life. Thank you so much for all the love and support so far. Slowly and steadily, our tribe is growing, and I feel more responsible because I know a lot of you trust me with your money. Rest assured, I would continue to keep a close eye on the market and continue to share my knowledge with you all. Having said this, I would strongly encourage each one of you to also learn how to do fundamental analysis of a company. Because the most important aspect of long-term investment is conviction, and that comes only with knowledge. With this, today I want to discuss the hottest topic of Dalal Street. What are the expectations from 2024? 2023 has been phenomenal for the market. Can Nifty continue its winning streak and touch new highs in 2024? Or can it see a good correction in the market? If yes, what are the odds of correction and when can we expect it? Then another important question is, how should you strategize your investment in 2024? Should you just wait for the correction and invest lump sum at the time of correction or continue to invest systematically? So let's try to decode the current state of the market and get the answers to these questions. So I have identified 5 factors that can drive the market in upward direction and 5 factors that can result in correction. But before that, let's first try to understand the market valuation. So Nifty is currently trading at a P ratio of 23. By the way, friends, now you can get all these details on screen there itself. So Nifty is trading at a P of 23 and its last 1 year of historical P is 21.7 and 3 year historical P is 22. Just look at the PE during October last week. It was near 20. In fact, I even tweeted about it where I clearly mentioned that last time Nifty was at this valuation at levels of 17,000. If we consider Q2 result in valuation, PE at 1920 level is mouth-watering for fundamental investor. Those who regret not getting right opportunity in last 5 years, you don't want to regret now. I don't know how many of you utilized the opportunity, but Nifty has already zoomed nearly 15% from those levels. Folks, it gets very difficult for me to provide instant updates on YouTube, and that's why I would highly recommend following me over X because I instantly post the updates over there. Now coming back at the current levels, Nifty at PE of 23 is similar to its median PE of last 1 and 3 year. So Nifty 50 PE is neither too high nor too low. If you look at Nifty Midcap 150 valuation, it is trading at a PE of 26.7 where 1 year median PE is 25.1 and 3 year median PE is 26.5. Again, current valuations are not very high as compared to median valuation. And Nifty Small Cap 250 is trading at a P of 27.5 where 1 year median PE is 21 and 3 year median PE is 24.6. So as compared to 1 year median PE, valuations are on higher side but similar to 3 year median PE. Overall, the valuation at index level is neither too expensive nor too cheap. Although small cap index is slightly on the higher side. Yes, valuation would certainly vary at individual stock level. Now let us try to understand the factors that can drive the market upward. So first factor is good earning growth expectation. Now this is the most important aspect. In the short term, while markets can behave irrationally, in the long term market performance is always linked with the earning growth. So first of all, the great news is that Indian economy is looking very resilient. Be it GST numbers, auto sales, banking asset quality or manufacturing index, data suggests that corporate earning growth is looking very resilient in 2024. Then inflation in India is looking under control and RBI governor in his latest comment has mentioned that the high growth witnessed in Q2 in GDP will provide assurance that the economy is on track. The low core inflation number in the last few months will provide comfort that there is no need to increase rates even while headline inflation is likely to be volatile in the upward direction. So this is a very positive commentary from RBI governor. Then if you look at consumer demand in the economy, it is looking very resilient. Be it auto sales, housing loan, car loan, business loan, or even travel scenario. So that's again a positive factor that would drive the earning growth. The last piece is the crude oil, which is now at lower level of $77 as compared to $95 a few months ago. So all these factors could result in a good 15 to 20% earning growth in 2024. Then second factor that can drive the market upward is expected fall in interest rate in India and US. As we are all aware, the interest rates in India and US were on a rising spree for almost 1.5 years to tackle the inflation problem. But now it seems the worst is over and there are already indications that 2024 can see fall in interest rate. Now try to understand the implication of this. The moment interest rate would start falling, there would be availability of cheap money. We have seen that during COVID how low interest rate created huge liquidity in the market. So high liquidity would result in a lot of money inflow in the market. I'm sure you would be aware that FIs have pulled out billions of dollars from Indian market in last 2 years. So fall in interest rate can see huge FI inflow, and that can be a huge growth driver for the stock market. Moreover, cheap money with lower interest would also result in faster growth in the economy. So this factor of fall in interest rate would be the biggest growth driver for stock market in 2024. When will the interest rate start falling? Not sure, but expecting it in second half of the year. Then third factor is increasing retail participation. Thanks to the growing awareness, today small retail investors in India are pumping more than 17,000 crore worth of SIP. And that is the biggest reason why Indian markets were resilient in 2023 in spite of heavy selling from FIs. So I expect this momentum to continue and drive the markets upward. Then fourth factor is expected stable government in 2024. Let's accept this. Nobody likes unstable government, and a lot of money inflow in Indian economy depends upon this specific factor. Now, after the recent state election, it seems BJP is clearly coming again with a high majority. So that would again be a positive growth factor. Although I think the market has already discounted BJP win in the general election, still a strong majority of BJP in 2024 election can be a positive factor for Indian stock market. Then fifth factor is real estate revival. After a long time, the Indian real estate sector is witnessing huge demand. And when the real estate sector does well, there's an entire ecosystem around it. So many sectors related to real estate are expected to do well, and that would again drive the markets. Considering all these factors, I won't be surprised if Nifty grows another 15% from current levels to touch a high of around 24,500 to 25,000 levels. At these levels, by end of year, Nifty valuation would still be decent, assuming 15 to 20% earning growth. By the way, friends, I have a closed community of serious long-term investor where I share one exclusive video every week that include my own investment strategies, stocks I am buying, and a close eye on the key event in the economy along with quarterly results. In case you want to explore it, I provided the link in the description. Now let us look at the potential threat that can result in market correction. So first biggest factor that can result in correction is profit booking. So last year Nifty generated around 20% return. Especially in the last 9 months, Nifty returns are around 28%. This rally has been crazy at mid-cap and small-cap level, where mid-cap has jumped around 45% and small-cap jumped 50% last year. So when you see this kind of rally in wealth creation, market participants look for one small reason to book profit. Now what could be the reason? Well, first reason I could think of is uncertainty before the election. So there could be profit booking before elections to avoid any uncertainty. Then second negative factor could be prolonged slowdown in US. Since the interest rates are still at decade high level, it might result in continued slowdown for the next couple of quarters. And this high interest rate scenario could also result in negative implication in US economy that can also impact Indian stock market. Then third factor could be U-turn from US Fed. In the last meeting, US Fed has highlighted the possibility of rate cuts in the US. However, any negative stance from US Fed and delay in rate cuts can create negative sentiment for the market. Fourth factor is unexpected or below expected election result. As of today, the market movement is suggesting that BJP will win with high majority. However, if the results are not as per the expectations, then it might result in stock market correction. Then fifth final factor is geopolitical unrest. 2023 has witnessed Russia-Ukraine war, and there are already issues with other countries like China, Taiwan. So any negative development on that front can result in profit booking. Now these are the expected event. Apart from this, any unexpected event or black swan event like COVID can certainly impact the market negatively, although we can't predict any of those kind of events, but that risk would always exist in the market. Considering all these negative factors, Nifty can potentially see 5 to 15% kind of correction. Obviously, nobody knows the exact timing of the correction, but I would say be prepared for any sort of volatility anytime during the year and buy that dip. So I would suggest that don't wait for the perfect time. Continue to nimble good stocks in a systematic manner, but at the same time, it would be good to have some 15-20% cash in hand to start 2024 so that you can utilize the correction as an opportunity. If you don't have the money, maybe you can consider booking some profit and sit on 15-20% cash that can be deployed during market correction in 2024. Apart from this, you don't have to do any major changes in the portfolio, assuming you have already invested in fundamentally strong companies. I think fundamentally we are in a structural bull market and Indian economy should continue to do great. And one last thing I would say is Please try to keep a fine balance across large, mid and small cap. Last year rally of 40-50% in mid and small cap obviously looked very tempting and you might want to have all the exposure in mid and small cap, but I think that 2024 can be a year of large cap at index level. Especially with FI's money coming in into the market, I expect Nifty to do much better at index level. Again, I'm not saying that you should sell all your mid cap and small cap stock. All I'm saying is keep a fine balance across large, mid and small cap. Again, how much you should keep across these categories, that would depend upon your individual risk appetite. So yeah, this is it for this video. If I quickly summarize 5 factors that can drive Nifty towards 24,000, 25,000 kind of level include good earning growth expectation of 15-20% in 2024, then expected fall in the interest rate in India and US. Third factor is increasing retail participation with nearly $2 billion SIP book. Fourth is expected stable government in 2024, and fifth is real estate revival. And 5 factors that can potentially result in 5 to 15% correction that include your profit booking due to sharp rally in last few months, second prolonged slowdown in the US, then third could be U-turn from US Fed on interest rate, fourth is unexpected or below expected election result, and final is geopolitical unrest or any black swan event. Now let me know, where do you see Nifty in 2024? If you find this video useful, do share it with your friends and also let me know which sector or companies you want me to cover next. I'll see you next video. Till then, take care.